I guess everyone can see my screen. I guess everyone can see my screen. Um, right, so let's break down the street I was showing these other guys in the general channel together. Let's break it down together. Let me show you guys how the setup was and how I took it. Because actually I didn't actually share much information, but let's break it down together. I think swipe everything and take it all over. All right. I think I spotted the setup on the 15-minute time frame. So let's cut price. Let's say, yeah. Um, let's cut price, let's say, yeah. And so what actually happened, according to what I was trying to show you guys the other day, because since most of us are familiar with this setup, most of us are familiar with this normal SMC setup, sweep, break, liquidity, and inducement, right? So um I've seen that all right. If you're very, very familiar with this one, there's no need leaving SMC, like leaving SMC completely in the sense that you want to leave you want to trade Malaysian support and resistance. So for me, it's actually better you combine the two. That's what forms the alchemist by combining those two strategies. You understand? Combining the two strategies is going to make your alchemist strategy far more perfect from other people. So it's very, very easy and basic. So what happened here? I think we had um we had a sweep, we had a sweep, then we had a break of structure. Sweep break of structure on this on our 15-minute time frame. So in case you come to the market anytime, we are not going to be talking about storylines today. You understand? We're not going to be talking about storylines, and storylines is just all about having a direction of your trend. So it's different. You get storylines about having a direction. This one's about the setups you should look out for, the setups you should take when trading Malaysian SNR. Because if I told you guys that if you're trading just storylines, it's going to limit, you're going to have limited setups you get, because you always want to look out for just a setup that came to a key level and then rejected. And not all the time you are going to sit on the chart, and not every time it's going to work on the chart. So you have to know how to look for these setups and how to use them. And we are going to also know how to use ranges. You should know the market moves from one level of liquidity to another. You understand? It moves from internal range liquidity to external range liquidity. You are supposed to understand that one. So that if the market is moving in a bullish trend like this, it's moving from become sweep this internal range liquidity, this is an internal range liquidity. Once it's being swept, it goes up to sweep this external range liquidity. It comes back, forms another internal range liquidity, go up, comes back, sweep that internal range liquidity, go up, break the external range liquidity. So market moves from internal range liquidity to external range liquidity. That's why you always see the market move from IRL to ERL. You understand? So you have to understand those stuff too, because the market must always move like that in ranges. You have to understand ranges. So I think I'm going to schedule another class and I'm going to show you guys ranges. We're going to talk about ranges too. I think maybe next class we'll talk about ranges. I'll just include it in what we're supposed to do. We'll talk about ranges and how to have your correct ranges and all those stuff. Because once you know your range, you know which point to focus on. You know which point to focus on. So it's very, very important. That's it up. You just look it out on the M15. That's it up. Just look it out on the M15. This one is just like I came on the chart now. For example, let's say I came on the chart and I just saw something like this on the chart. Get I saw a sweep and saw a break of structure to the downside. You understand? You just came on the chart, you saw a sweep, you saw a break of structure to the downside. So first of all, gold has been very, very bullish. So to take this kind of trade was is first of all very, very risky. You understand? It's so risky because gold has been bullish. I think this was the all-time high of gold. Yeah, this is the all-time high of gold. So it's first of all very risky. But just the sense that you just came on the chart, we saw. And make sure there's something I also tell you guys. You should always break two times. You should always have just two breaks for you to confirm your break of short to the downside. Let's say yeah, we had this other small break of structure to the downside. Price break, yeah, break this one and break this one to the downside too. So you always confirm your bias. You understand? So now let me show you guys something. Let's say if we have something like this one here. If I say price moves like this, what are people sending me the analysis? Okay, let me take this out. And let's say, for example, you say price moves like goes up, comes, gives us internal range liquidity, goes, comes, sweep this internal range, taps here, goes up. This is a bullish order flow, comes back, go up, sweep internal range liquidity, head for external range liquidity. So we know here we are bullish. You get now. How do we know that? All right, our trend is about to turn bearish. We know that once price break our low, we know it's bearish. But now you see price break this low here, but you're still bullish. For you to know things like that, you have to see a double break of structure. Okay, you have to see price comes like this. Let's say it gives you this low, goes up, comes back, break this low and break this other low. So you see two break of structures. Okay, if you have two break of structures, you should know that okay, your range, you're already in a bearish range. And where's your range? Let me show you. Hold on, I'll show you your range. So once you have two break of structures, where's your range? Your range is from year to year. You get that's what we're doing when we're trading pure SMC. We knew our range was always from this low to this high, which when you place your Fibonacci tool from here to this high. No, this is not Fibonacci. You place your Fibonacci tool from here, this low to this high. To this high here, to this high. You're going to have a range where you want to focus on looking for a buy. Okay, you're going to have a range. Hold on, let me put this in the chat. You're going to have a particular range where you want to be looking for a buy setup. Same way for a sell setup. You understand? If you use your Fibonacci tool, I'll show you guys how to do that at the next class. How to use ranges to always know if you're on the right side of the market or not. You understand? So uh, all right. For example, yeah. We know for our range, where's our range we want to be focusing on? If you use your Fibonacci tool from here, we have this high, this is our range high, and here's our range low. So we know we're waiting for price to come above here, which is our premium zone. For looking for any sell, it should be in this premium zone and not in this discount. You understand? It should be in the premium zone and not in the discount zone. So that's just all about ranges. So let's continue. Again, what I was saying was we have a sweep here, we have a break of structure to the downside. Then we have something like liquidity. We have enough liquidity inside the main price may come to this part because this high is already a strong high. You get so now how do we know a high is a strong high or a low is a strong low? Using our basic knowledge of SMC, of advanced SMC or algo market structure. You know, once price have created any low like this and go to the upside. Price always comes, sweep this low. We have a sweep of liquidity and price break structure to the upside. And how do we know this is strong low? Because of this sweep. We get because of this sweep. Once we have this sweep, we already know this low is a strong low. You understand? When we have this low, we know this low is a strong low. That's why when we're doing that's a smart SMC stuff, we always call this one our protected low, meaning price was protected, like price was not going to come to this low. Yeah, especially when we have liquidity present inside this range. You understand? We always know price is never going to come back to this low. We call it our protected low. So this is your strong low. For a high, let's say for a sell setup is going to be something like this. Price sweeps to the upside and breaks to the downside. See, this high is already protected. You understand? Because we have this sweep here. So we call this high a strong high. So now, for example, here we had a strong high because of this sweep, and this another sweep here. We can even use this one. Okay, you can use this one here and this one here. I just decided to use one on a large scale. So we have this break of structure, we have this sweep to the upside. This is our strong high. Because actually this setup, I noticed it was on the 1 hour time frame, not even on the 15 minutes. Let me borrow this thing off. All right, so it's easy. Here's our strong high. We don't expect price to come to strong high. And now, don't always make that mistake to come and you say, okay, let's say on this 15 minutes, this is an A-shaped key level here. If you turn on your line chart, here's an A-shaped key level, here's also an A-shaped key level, here's an A-shaped key level. You may say this is an A-shaped key level, and let's say, yes, this is a QMR. Yeah, you expect price to just come here and tap and go down to the downside. No, you understand? What is going to happen is, man, why is my voice sounding nice? So what's going to happen to you here is go to the higher time frame. Don't use the 4 hours. You can use the 4 hours if you wish, but on the 4 hours, it's not going to actually give you something you really want to use because here on the 4 hours, if you skate to 4 hours, look at what happened. We have an A-shaped key level here. So let's say if we mark out this A-shaped key level like this, we turn back our line, our candlestick chart. What happened? This A-shaped key level is already on fresh because of this week. So he has already played out. Are you understanding? He has already played out because price came tap so the downside. So this key level is on fresh, so we don't need it again. So for us to have a fresh key level, and take note, this is our strong high above here. You understand? So for us to have a good key level, go to daily time frame, go higher to have a clearer picture. So here on the daily time frame, we have turn on your line chart, we have an A-shape key level. Mark out that A-shaped level. So this is still your higher, your strong higher, and we have nothing to do with it again because we don't care about the weeks. Yeah, yeah, or everything is just weeks. See, this is just a week. We don't care about that week. You understand? We focus on the key level. Your focus should be on this key level, this key point. So what happened? Price came to the key level, breakdown to the downside and all those stuff. Steve, everything here is just like surrounding around storylines. You understand? Everything is just going around storylines. Because if from here you go down to a lower time frame, you see a break of short to a downside on the 4 hours or on the 1 hour, which can still make your setup confirmed. You understand? So now we have this key level here on this daily time frame. Now, yes, when the real work begins, you understand? The real work begins. Step one time frame lower, which is the 4 hours. We call this time refining. So yeah, we know, let's take this off so it doesn't confuse you. So we know, yeah, yes, um our daily key level. Let me go back to the daily time frame you see. Yes, our daily key level. You are seeing now. This is our daily key level. We scale down one time frame lower. What are you going to notice? You are going to notice this key level is in alignment with this open close. You get it's in alignment with this open close candle, this open close key level here. You understand? So that already gives you he already tells you something in your mind like, all right, yeah, maybe you should be on the right track. I mean, this key level should be something you should really bang on. If you understand, it's something you should really put in your mind. So this is an open close key level. So now we need to refine this open close key level again. Again, we have to refine this open close key level again. And mind you, this is still our daily key level at this same point here. And now if you go one time frame closer, one time frame lower, which is the 1 hour, you're going to see what's happening here. Yes, your daily and your H4 key level. We want to refine it. Refining, we don't go down, especially when we're looking to sell. We refine going upward because you cannot be refining and coming towards down instead when you want to sell. You understand? When you're selling, you should be refining and going upward. And your refining should take from 2 to 5 pips. It should not be more than, you should not leave and carry this guy here and come and put it up here. Let's say you carry another line and come and put up here and say, okay, I want to refine this zone here. You understand? It's too big. It's too big. So your refinement should take almost 2 to 5 pips. It should be very small. It should not be that much. So now refining these levels, what do we have? Turn on your line chart. You're going to see what's happening. Here we have a V-shaped key level which has been broken. So it's going to turn into an A-shaped key level. So we can add it here. You're seeing it's still around our zone. We get it's still around our zone. Still around our zone because it's a V-shaped key level, which is there. So let me see something. Let me see something. Let me see something. Okay. All right. All right. All right. All right. All right. All right. So here also we also have an A-shaped key level. We also have an A-shaped key level here. So we know price is going to come either one of these 2 points. Automatically, it should already tell you if you're on the 1 hour time frame, you should not understand that price may come to either one of these 2 points. You can go down to the lower time frame again to refine it more if you wish. Let's say 15 minutes to refine it more to look for a more precise and better entry that is going to give you more tighter stop loss. You understand? That's going to give you more tighter stop loss. You can go down, but I just want to stick to the 1 hour time frame. You get, I already have my 2 zones, so I can take off this guy, take off that guy, and I know these my 2 zones. I expect price to come to. You understand this one? And people that trade SMC, pure SMC, they call it an order block. It's an order block where price will likely come to react to this order block. But now you cannot just say price will come to the whole of this order block. Your stop loss is going to be above up here. You know, price is going to come to just a particular zone here. So now, what's the next thing you should be looking out for? Liquidity. You understand? Is there liquidity? Should be like your your first question you should ask yourself after you've gotten to this stage. Is there liquidity? And yes, we have liquidity here. Which if you go on the 15 minute, you're going to see clearly this high is our liquidity zone. Get this our liquidity mark here. This highest liquidity. So I just prefer to mark it on this time frame. And it can be weekly, it can be body, it can be anything. So yes, your liquidity. So yes, our zones were marked. So I already know if this is our liquidity, the zone which is closer to this liquidity is going to be my entry. You understand? That's going to be my entry, which if I place my entry here, I'm not wrong. You understand? I'm not wrong. So before you do that now, you want to look for your conferences. So we have the only conference we have our trend line conference. And I told you to confirm a trend line conference, it should be in alignment like with engulfing candlesticks. You understand? Trend lines should have it should be in alignment with our engulfing candlestick, I think. I should let me show you, let me show, let me show, let me show. Yeah, trend lines. A trend line must have a break. You must have 2 touches and a break, or just 1, 2 touches, and the third touch is your entry. You get now. You should have 2 touches. It should be more than 2 touches. You have 1, 2, the next touch is our entry. 1, 2, a break. This one is very nice. A break, third touch is our entry. 1, 2, touch, entry. Same thing here. So you should see a maximum of 3 touches on your trend line. If you see more than if you are seeing 4 touches already, you are seeing 3 touches already when your entry, it hasn't come to your entry point yet. No, you're already wrong. For me, you're already wrong. Here we have 1, 2 touches entry, 1, 2 touches entry, 1, 2 touch entry, 1, 2 touch entry. So I think let me see, let me see, let me see, let me see. Okay, here's an example of trend line. See, here's our trend line. We use the trend line on these our key level zones. Get 1, 2, 3. See, we have engulfing candles. These are when you turn your line chart, you have to see engulfing candles. Engulf, engulf, engulf. Those are high probability trend lines. The one that have engulf candles involved with it. Here's another trend line here. We have engulf, engulf. You understand? But this one does not engulf, so it doesn't mind. But always look for the ones that have engulfing candlesticks. Here, 1, 2 touches, third touch is your entry. So there's an engulf here. Here's the engulfing zone here. You get this an engulf. So always be mindful of that. Yes, also an engulfing candle on this trend line. There's also an engulfing candle on this trend line. So you should always have those engulfing stuffs. It's going to really help you. So now, how do you look for our trend line? Turn on your line chart. Line chart. Simple. Take your trend line. Your trend line should be this tool, this last one, this tool here. I think I showed you guys this one, this extended line. That should be your trend line tool. All right, you now look for zones are touching that have touched 2 times. You expect it to touch the third time. You get here, price touch here 1 time, the first time. You pull. Yeah, it's not going to make sense. Yeah, it won't make sense. So see, we have a QM, a QM, QM entry. Here was a QM. So touch 1 time, touch second time here, break structure. So expect price to tap here and sell off. And then again here, we had another one, which was this one. First touch, second touch, first touch, second touch. So if you turn on your line, your candlestick chart, you see here we have an engulfing candle, here we have another engulfing candle, here we have an engulfing buy candle. You get so my trend lines are confirmed. I hope it's making sense. We have engulfing candles, so my trend lines are confirmed. So now the zone where this X meets, that should be where you should be expecting your entry. Hope is making sense. The zone where this meet, that's where you should be expecting your entry. All touch needs to be engulfing. No, not all need to be engulfed. Just you should at least find one engulfing. You understand? Not all must be engulfing. You get you should at least find few engulfing there. Hope I'm making sense. So now here's your entry here. Now place your stop loss above here. It should be how many pips? Let me see. Your entries here. This was my roadblock, which I noticed was here. First roadblock. Uh, so stop loss. Just above here. Yeah, this is a nice stop loss. I always use this as my stop loss. So you have one is to 21 risk to reward. 1:21 risk to reward. Right. So now let's play and see what happens. So price comes, tap into our entry and sells off. It's very, very simple. You get this your trend line where you expect all the touching and everything happen here on your trend line. So you're good to go. That's all. You understand? It's very, very easy. Very, very easy. So simple. It's not something difficult. It's something you need to just put your mind to it. You get and you should be able to always able to look for it. I think he also does this buy setup here. Someone and I asked in the channel if people could find this sell setup. People showed me this buy. Somebody showed me this buy here. Let's see. What is this? Somebody showed me this one. Let me take up this roadblock. Which I think was reacting from this open close. Reacting from this open close. And the daily time frame, let me go to the 4 hours. 1 hour. Yeah, it's a nice trade, but I won't take this one. I won't take this buy. I'm a little bit confused. What does the use of the M15 entry show? Because I see you didn't use it. Yeah. The 15 minute was just a setup I found. You get now. Or just a setup I found. Like, for example, let me show you. Let me show you. For example, I just noticed the setup on the M15. You understand? You can notice the setup even on the 4 hour time frame. You understand? You can even notice the setup on the 4 hour time frame. Any time frame you notice your setup there. It's just like an example. Any time frame you find a setup there, go on the higher time frame. You understand? Any time frame you find a setup there, go on the higher time frame to confirm the setup. You understand? If you see any setup on any time frame, be it 1 hour, 15 minutes, 4 hours. Go on a higher time frame, find your setup. Let me show you guys another example. Ask any question, ask your questions. Let me look for another example. I think I recorded some examples. You can ask your questions. Any question you have, you can ask and I'll explain. Oh, we have enough time. It's 11:40. We have enough time to 12. We have enough time. Any question you have, you can ask me. Can you please do one more of the back testing? Yeah, 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 yeah. I'm looking for another one to show. Just hold on. The 4 hour time frame is not sufficient for refinement, or we need to move to 1 hour time frame. Yeah, 4 hours. 4 hours. If you refine on if you refine and you're on, let's say you go on the higher time frame, look for your let's say to confirm your setup you get, and you come down to the 4 hours. You refine to the 4 hours. It's always good to refine to go another time frame lower so you can have a good entry. Because if you're entering a trade on the 4 hours, know that your stop loss is going to be very, very huge. And if you have any drawdown, there, it's going to be very huge. You understand? So you always want to go down to a lower time frame. You get to have like that precise entry, that precise sniper entry there. I hope I'm making sense. Hold on a little. Let me
Yes.
check. Let me check this. Let me check this. All right, all right, all right, all right. So, okay, mean it's good to stop at the 1 hour time frame. We should move lower. Yeah, you can move lower again. You can move lower again. You understand? You can go lower time frame. Let's say 15 minutes. End at 15 minutes for me. End at
Ecco,
15
molto
minutes.
good.
Yeah, I can get you well.
Mamma mia, whenever. Come with a daily dejection, 4 hour break it out. Let's say we
Come again,
use.
please. Hello? Okay, so, also, when you were back testing, I saw
I'm on the mic, Mike.
Who is talking, please? Fletcher, were you saying something?
No, bro, I wasn't saying anything.
All right, all right, all right. So Stella, back to you. You're saying also when you were backtesting, I saw you started looking out for possible setups when the daily time frame form a key level, which hasn't yet been rejected. So my question is, can I look for setups when the daily key level is formed without being tested, or I should wait for a rejection? Yeah, possibly. If you're looking for setups, you can wait for those setups at those points. You wait for if without seeing a rejection, if that's if you're not looking for storylines. You understand? If you're not looking for a storyline, you're looking for setups. Yeah, it's possible. You get if you're looking for setups, it's very, very possible. You must not wait for the storyline stuff. The storyline is just to guide you on your direction. Because after the storyline, you're still going to have the same setup. You get, let me show you guys, for example. I think maybe that's what is some of the time it confuses many people. All right, let's say for example now, for example, yeah, we have, let me do it with this other tool. We have this A shape. You get this A shape, yeah. Then we have this, yes, our key level. Get that's our key level. So now what happens? We expect price. Let's say these are daily key level on a daily time frame. You understand? This on a daily time frame. We expect price to come, tap into this key level and reject. So now what do we want to see on the 4 hour or on this day, still on this daily time frame? We want to see a candle that is rejecting like this, a candle rejecting from this high. Get want to see a candle rejecting from this high. So now, again, what you want to see now on the lower time frame, like 4 hour time frame, here's what you want to find on the 4 hour time frame. You're going to see something like this: taps, break of structure, get break of structure. And now, what are you looking for? You're looking for a reversal to this one. So you already have your sweep and you have your strong high. I understand. So this is your setup. This is a setup that I'm trying to explain to you. This is a setup you should look out for. This is the only setup you should use. You understand? The only setup you should be looking for. All people are making sense. So after your rejection on that daily time frame, you get 4 hours or 1 hour. You want to see something like this: a sweep, strong high, and price should come here. Now, to get this to catch this trade, to catch this sell trade, you should wait for a re you should wait for liquidity. We should be we should be a pullback like this. Price go falls down, comes back, tap here, scale arrow, and sell to the downside. You understand? So now you can now refine these and all those stuff. You can refine it depending on how I've showed you guys how to refine. Let's see GBP USD. GBP USD. Like for example, yeah, I just placed this one bid. There was no liquidity here. I just placed it to see if it's going to actually work out, but there was no liquidity at that point. So let me see daily time frame. Let's see what we have. The daily time frame. Daily. Channel. Line chart, rejecting the line chart, rejecting the daily, rejecting daily key level, 4 hour time frame. What do you want to see on the 4 hour or 1 hour? You want to see a break of structure, and this is the only structure here that we have that we can break. Let's go down to 1 hour to see if you see another. Yeah, this is the only structure you should break before you can confirm this trend. You understand? If you can confirm the direction of this market, you want price to break this point to the upside. Once you have broken to the upside, you're now going to have something here like this should be sweep, strong low, strong low, and liquidity should be inside here, which you expect price to reverse because what's going to actually happen if it works out, you understand? If you break the structure actually, you're going to see something like this. So you should have liquidity in here, then price should come somewhere here, buy off to the upside. Maybe you may buy and come to this level here as a roadblock. before selling down to the downside. I know my internet connection is unstable. How? I hope I'm making sense. I hope I'm making sense. I hope I'm making sense. Let's see, let's see, let's see, let's see, let's see. Mm, H4. Let's go back to 2022, 2024, or 2023. I think here was the setup I was explaining in the group the other day. That's what I was trying to explain the other day. I think this one was clear, right? Or any there was there any doubt on this? Was there any doubt on this setup? If there was, I can explain again before we look for another. Any doubt on this buy? No doubts. Okay. But it was simple. We have a sweep break of structure. We expect the price to come down somewhere here. We already have our range. Here was our range low and here was our range high. So we're expecting to buy inside the zone. So you have to look for that buy using the knowledge you have. Let's see, let's see, let's see, let's see, let's see, let's see. Why are you sending it so far? We actually have to finish. We have a lot of business to finish on the PDF. There's so many things we have to still work on. Just that I'm very, very busy lately. Very, very busy. I don't know why. See, key level, liquidity, everything inside here is liquidity. Liquidity. Price came tap, went down to the downside. You understand? I can also say, okay, here was my sweep. If I want to use this as my setup, here was my sweep. And here was my break of structure. This could be my break of structure here. This candle, break of structure to the downside. This is liquidity. You understand? MCS cut price here. Cut price here. Let's go to the daily time frame. See what we have. Daily time frame, just weeks, time frame. Or just weeks, full of weeks. I mean, the 4 hour time frame was just the most perfect time frame to use. You see, 4 hour time frame here, we have everything we need sweep, break of structure. And what happened? This liquidity inside here. There must be liquidity formed. There must be liquidity. If you turn on your line chart, you see, you cannot just use this one when there's a sweep here. You understand? There's a sweep behind here. You cannot use this one here, and here's where the break of structure is. So you don't understand SMC very well. If you're taking a sell from this point, let's say you're using this key level here, you can say, okay, this is your key level. You want to use it to wait for a back for a sell at this key level. That means you don't have sense. You have to use one instead as liquidity. You understand? And now this should be your targeted key level. So always try to understand this knowledge of sweep and break and all those things. You understand? It's going to help you very, very much. It's going to help you in a very, very big way. Once you understand the knowledge of sweep and all those things, inducement, everything, I think, yeah, let me see, sweep. break. What happened? There should be liquidity here. There should be liquidity. Liquidity and go on daily time frame to see what happens. Daily time frame. I think this was a key level that was on fresh. This is an on fresh key level. So this one I'm not going to take this. This was a nice sell, but I won't take it because this key level is on fresh already. So it's very, very risky. This on fresh key level slab. It's not something you should always just take like that without really reasoning it out. Because yeah, this if you want to say this A-shaped key level, it's already on fresh because of this week. You understand? But this one was a very fresh key level. This was a key level which was fresh. You understand? Price came tap go. So now, not every time you're going to come and let's say on the daily time frame and you see a start of a storyline. You understand? A start of a storyline because those storylines you will mostly have it on a weekly time frame. You mostly have storylines in a weekly time. Not every time you come, you see a start of a storyline and you think you're just going to have everything you want, like everything I've shown you guys. You're just going to come and see it appear. You get not all every time it's going to happen like that because the market has its own algorithm it follows. Not every time you come, you're just going to see price respecting the storyline. And oh you're going to see the storyline. In fact, to see a storyline is very, very difficult. You understand? To see price rejecting a particular key level on a higher time frame is very difficult. It's something like, let's say, if you're on a weekly time frame, you're looking for a storyline. If one storyline happened on this week, that means it's going to take several weeks for another storyline to happen. Hope it's clear. It's going to take several weeks for another storyline to happen. So the only thing is you can just use those advantages of you go to the like you have a storyline, you look for those roadblocks and you trade according to those roadblocks, following the roadblocks, expecting price to go to those levels. For example, let's say let's check monthly. Storyline, but it's on fresh. Let's just use it. Storyline. Very, very on fresh. Very on fresh. Here's a fresh zone. The fresh zone. Let's see. I hope this first touch didn't touch. Right, he actually touched the first time. But didn't actually break any good structure here. Didn't break any structure. I think when he came the second time touch, then he broke his structure, which was this one. He broke the structure here. That's on a weekly time frame. So there's no time to waiting for those things. I always look for my storylines on the daily time frame. You understand? I always look for my storylines on the daily time because it's far more better. So yeah, we have a break of structure with downside. Once you've gotten this, as I told you guys, look for these are points where you want to take yourself from. So you just need to look for the one that is not fresh. So let's scale down to daily. See what we have. Let's see what we have. Here's our break of structure here. And then on daily time frame, we start looking for your setups on everything you need from the daily time frame here. Here was a break also before the touch. The touch break, structure, second break. Then the pullback. Let's see. Pullback. 11. Here's another key level. You expect them not you want the one which have liquidity closer to it. Don't go get the one which are don't which when there's no liquidity there. There's another key level. So you turn on your line chart and you see. So price came to this one. That I think there was liquidity in the middle because this is the daily time frame. If you jump down to 4 hours, look at price again. Yeah. Wow. What happened? We have liquidity inside here. Liquidity. And this key level, we could refine it to this one. You understand? We could refine it to this one. So this was the exact key level. But this everything up here was not good because there was no liquidity. You understand? There was no liquidity to form it to like form inside here before price will come here to come and hit here. It's very impossible because price works with liquidity, internal range liquidity. You must look for an internal range liquidity, which was this one. I think it was this one. Yeah, internal range liquidity. Sweep this internal range, then target this external range liquidity here. So now if this was our daily key level, we could refine it to this one. Refine to this one. Here will be your entry. You target this external range liquidity. Wow. That's all. I think back to daily. Something I saw here, which made sense. Daily, then we have a daily key level here too. Daily key level there too. We should expect price also come tap. You could still look for your storylines there, but there was liquidity involved there. There was liquidity involved. Liquidity. Then look at here. We have a sweep here. Are you seeing? Look closely. We have a sweep here. Strong high. Get strong high. I mean, we are not expecting price to come to this high. Strong high. Let me take off this line. I hope it's not confusing you. So yeah, we have this strong high here. Sweep. We have a break of structure down here. And you see, we have to go through. But well, our storyline have already been confirmed. That means we're on a downtrend. You get now on a downtrend. So we have sweep, strong high, break of structure to the downside. So now liquidity should be inside here. You understand? Liquidity should be inside here. What are we expecting now? We're expecting price to come, should come either to this high or anyway it feels comfortable inside here before going. You can scale back to the weekly time frame to like confirm it yourself. If there's any confirmation there. No, just weeks, just weeks, just weeks, just weeks, just weeks. That means our end daily time frame. Because we don't want weeks, we don't want weeks, we don't want weeks. You need weeks just for a break of structure and all those things. That's what the only things you need your weeks for. So now, since there are weeks on that time frame, we're going to stick to this one because this is liquidity. There's nowhere inside here expect price to come to. No place inside here expect price to come to. Just this key level. Because if you turn on your line chart, you understand where you're always in this A-shaped key level here, right? This is only A-shaped key level here. If you want to refine this one, you go down to the lower time frame and see how to refine this A-shaped key level. Let's see if it's even possible. Yeah, it's possible because you cannot just take a trade on the daily time frame. So we already know if this was our A-shaped key level here, we need to refine it again more. See, we have it here, then you can take it up to this upper part again. Your refinement, you understand? That's your refinement. And also this QMR here also is also a good refinement. And this high 2 years is also a good refinement. So these are the zones you should be looking out for. That's what you should be looking out for. You can see go again one time frame lower, which is the 1 hour time frame. Let's go back to it. 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 So these are the zones which you're actually looking out for your sell entry. You get this one, these two. Yeah, line chart, candlestick chart. You see, so this here is already an order block. You guys trading SMC, this is an order block here. You should be targeting. You understand? But me, I always want to come to this QMR. I always like this QMR, even though the QMR have already been tested. You can look for the ones that have been tested here because that's the only reason you're refining is to look for the ones that have been tested and the ones which is still fresh. You understand? You want to see the ones which has been tested and one which is fresh. So here is far away from your day. Up here is far away from your daily key level. Your daily key level was right down here. So if you want to come and say, okay, up here is your refinement, that means you are very, very crazy. You understand? So now, if we to take this QMR key level, it has been tested already, meaning it's not going to work for us. You understand? Even though price came up to it, but it's wrong. So take this other one here, this an A-shaped key level here. If you're turning your right, you're going to see A-shaped key level, which is fresh. Pull it. So here could be your entry, your stop loss slightly above, and you sell it through. Sell it to the downside. Because we have present, liquidity present, sell it to the downside. Targeting this low down here. You understand? Targeting this low down. This should be a roadblock. Yeah. roadblock. That's your TP. After that, what do you expect? You expect price to come back again, gives you liquidity and still continue riding down again. You turn on your line chart. Let's see what happens. Line chart, see what happens. But always know you should always have liquidity. You should always have liquidity to ride to. Don't ride alone, ride with liquidity. So V shape pushed on into an A shape, A shape, A shape. Which one has liquidity closer? Turn your line chart and check the one which have liquidity closer. This liquidity here. This one is liquid. There's nothing down here you can use as liquidity. So this is your liquidity. This guy here. This is your liquidity here. It's showing that this trade has already gone through. This one has already gone through. This one has already gone through. You can refine now on a daily time frame. One step down, 4 hour time frame for refinement. Refinement. This one has already gone through. I mean, this one should be the next point which is free. You see this V-shaped zone here. Turn on your line chart, you're going to see line chart. There's a V shape here. You get this a V shape here. So you cannot use this one because this one has already been tested. Turn on you can't see V shape that turn into an A shape has already been tested. And all this is liquidity. Everything here, look at this, a lot of liquidity here. Look, liquidity, everything here. This one. Everything here is money. All these highs here, it's money. It's liquidity. So you have nothing to do with anything here. You have nothing to do with anything here. Your target should be this high. So this is liquidity. Which part is closer to your liquidity? This one or this one? You see this one down here. Maybe it's your liquidity. What happened? Price came, swept liquidity, tapped into your zone, sniper entry, and you have a sell to the downside. It's very, very easy. So easy. Very simple. So if you don't see liquidity, don't take the trade, please. So to confirm the refinement, we need to see liquidity. Yes, to confirm your refinement, you have to see liquidity. And in trend line too, even though we are not using trend line, I'm not showing trend lines here, but you should also use trend line to as confluences. You see, you should always use trend line as confluences. Very, very important. Back to daily time frame. Back this, please. That's what I'm doing currently. I'm just showing you guys things how trades the trades that went to profit even though we didn't take them. So yeah, here's one. Let me see this one. It's not A shape. A shape. After we sold, if you sold from here, sold from here, target should be this low. You have this trade. Stop loss above. Oh, this magneto is crazy. All right. Stop loss. You have another one. So it's another one here. Thing you find the zone. Stop loss is slightly above. Target was down. All right. So I think this should be the third one. You need liquidity and everything to focus on it. So turn on your line chart. You're going to see this with the V shape right here. V shape and an A shape. V shape and an A shape. Yeah. So I think this you are you guys getting it's like my connection is poor. Can you guys get me?
Yes.
I don't know what's wrong. Recording stop, recording stop, recording stop. Can you guys see my screen? Or let me share again. So can I decide to start from the 30 minutes Find my sweep and break of structure, then move to the higher time frame below kilo. Yes, yes, yes. 30 minutes is good. You can start from the lower time frame, like 30 minutes. Find your sweep and all those things. You understand? You can start from any time frame, look for your sweep, then go to the higher time frame to confirm, make sure it's in alignment with any key level. You understand? It's in alignment with the key level. It's actually correct, but you should always know your trend. Know your trend and always try to go on the other time to look if you have a storyline align with what you are doing. Get always go check if you have a storyline together with what you're doing. It's going to save you a lot. Save you a lot. I think there's something here too. After what happened here, price came to the downside. Turn on your line chart. You're going to see price came to the downside, which was this one. We have a break of structure down here. Break of structure already signifies we're trending downwards. Break of structure signifies we're trading downwards. I think price returned to this key level. Tap to this key level. Downside. So people can also call this order block, but this is a very big as daily or very big as daily order block. So if you're seeing that as an order block, if you're using it as in an order block form, that means you are looking for losses. But it's a very big as order block. You wouldn't even know where to say. So when you tap like you're in places like you have to go to lower time frame for refinement. So actually refine to look for a suitable entry to actually take this liquidity. Next trade. So, mm, so can I decide to start from the storyline is a problem then? Yes, if storyline is a problem, then next class we are going to see work on storyline. Liquidity should be on the H4 or daily time frame. Liquidity can be on any time frame. Can be on any time frame, especially if you're looking for setup. Liquidity can be on any time frame where you can find your setup. You understand? Liquidity should be on any time frame. Any time frame. Except the daily time frame. We have the daily time, the higher time frame which we use it to look for directions, which are the 4 hours, 4 hour, daily and weekly. This ones, I think liquidity you should look for liquidity lower than that. But if you find liquidity on those zones, make sure you maintain that liquidity to a lower time frame. It should make sense. Because if you say, okay, this is liquidity here on this daily time frame here, that means you can enter this trade here on this daily time frame here without any drawdown or any problem. Are you understanding? This is your liquidity. Your liquidity, you should you're looking for liquidity on the time frame where you're looking for your setup. You should be looking for liquidity on the time frame which you're looking for your setup. Because let's say, for example, here now, we have this setup here. If you wake up and say, okay, this is your liquidity here, you understand? You can see this is your liquidity here. That means you should be ready, you should be able to take that setup at this point. You understand? You should not come and say, okay, this is your liquidity here, but you want to start refining because when I start refining, this guy here is not going to be really give me the right thing which you want. You understand? So, but this is a good trade which you can actually take from this point, but you can see if you could refine this trade. But for me, the trade was good at that zone. Let's see, refinement, open, close, tested, open, close. Yeah, this is a tested open close here. Tested open close above. Price came tap. Let's go to 1 hour. Oh la la. This one. Let's see if we take from up here, price didn't touch it. Yeah, kind of. Yeah, it was a good trade. You could still refine it to maybe 4 hours or 1 hour. 4 or 1 hour to have your trade. You understand? And we had the inside here again on the 1 hour, we had price came, break structure to the downside. You understand? Break structure to the downside. We had a reversal. Came to this open close candle here, tap there and sold off again more. So you can use it as confirmations for your entries and everything. Yeah, if you have any question again, you can ask me. Today was just for questions and all those things. I'll see if tomorrow. Tomorrow Saturday. We can have a class, a proper class. Where I just want to make sure all of us are on the same page. And to make sure all of us are on the same page. If actually you guys have been understanding what we have been doing. so far. But I hope those things I'm saying on my general channel, you guys are understanding it. I hope it's making sense to you guys too. Because I'm sending it generally to the public, but I hope you guys are getting a lot out of it. It's actually very, very helpful. But this I cannot share everything with them. I cannot actually show them the way I do it, like the way I do it with you guys. You understand? With you people, I have to be very open with everything I know. And actually I also trade I think this premium trading view, I think is a lower one. If I had the higher version, I could show you guys. I also trade order flow and volume profile and all those stuff. Yeah, it helps you to confirm for confirmation entries and all those things. But I'm not teaching that one in this mentorship. That one is something different. Something very, very, very different. So I will show you guys. Maybe I'll see tomorrow if I have a chance. So put my hands on a higher premium trading fee. I'm going to show you guys how it works on the chart and how you can use it to scale your trading game. You understand? So if there's no more questions, you can ask the questions in the group and keep on sending your setups. Keep on making the group active, please.
Emmanuel,
Yes, yes, yes.
yes. Before cutting off the call, I just want to be sure that I understood what you were trying to say. Because from what I understood, it's like on the H24, when I spot a key level and I move on the 4 hour time frame. Is it on the 4 hour time frame that I need to be looking for a sweep, a protected, and an illiquidity, or I need to move lower,
If you spot what on daily time frame, if you spot a
a
key
key
level,
level?
yeah, okay.
Mm,
So example, here's a key level.
yes.
In fact, this is a 1 hour. Let's go on a daily so I can actually see. Okay, let's say on this daily, yes, yes, a V-shaped key level. How do you know it's V-shaped? Turn on your line chart, you're going to see. So yes, it is a V-shaped key level. V-shaped key level. So what do you expect? You want price to come, tap into this key level with a wick. So the body will be below, be above, while the wick comes, tap into it. You understand? So now go one time
Yes.
frame lower, which is the 4 hour time frame. So this should you're going to see it's on a daily time frame. This is the daily.
Mm-hmm.
Where my stops at?
But are you supposed to wait for the daily candle to reject and close before moving to your lower time frame?
Yes, but there are times this daily candle is going to take a lot of time. Do you understand? For it to come and tap you and start rejecting and all those things, maybe it's not going to close. So there are times you even want it to close. But if you don't close, it's just rejecting. Start go to the lower time frame and start looking. Let's say if it's on a weekly, you cannot wait one full week for it
Yeah.
to close. It's very difficult to wait a full week for it to close. Just go down to a lower time frame and start looking for those break stuff. If you don't see it, no trade. There's no directional bias. You don't see it. So now, 4 hours then. Um, H4. What do you want to see on H4? You want to see something like this. A touch, get a touch into this key level. And now, the next thing, let me end this here. The next thing you want to look out for. Where was, like, which resistance zone actually caused this touch, this move before it touch? You understand? Look for that, like the most recent like resistance zone which actually push price to touch this key level. Here we have it. You understand? Here is it.
Yes.
So you wait for price to break this structure. Once price have broken this zone, which is going to be like this, price have broken this zone to the upside, what happens? Let's see like this. What happens? You will also want to look for a key level inside here because now we have three key levels which we are looking out for inside here. Which this will be
Mm-hmm.
one. Look closely. This will be one, which is an A shape, which as it's automatically, since it has been broken, it's going to turn into a V shape. So we have this one, we have this QM arrow, key level, and we have this V shape key level here. So we have these three zones where price is actually going to come to before going to the upside. Now, what we have, I think we have another one here. There should be an open close inside here. Yeah, there should be an open close. So there are actually four. There should be an open close inside here. Open close, open close. I think you guys know what is an open close. There should be an open close.
So,
So
Emmanuel, without you ignore the daily key level you've already marked.
yes, yes, just ignore it. All what is happening inside is already it's happening into this. It's happening like after this daily key level have been rejected. You understand? So
Okay.
forget about the daily key level you've already marked because it has already been tested with this guy here.
Okay.
You understand? It has already been tested. So now what happens? We have one, two, three, four key levels which we're actually looking out for. Now price is going to come back. Now start looking for liquidity. Which one? Where is liquidity most closer to? That one is going to work for you. Because if liquidity is up here, no, this one is going to work for you. You understand? But if you see that okay, there's liquidity right at this one year, that means this one is going to work for you. That's when once if you say it depends on you on what you see or what the market gives you. So if you have seen your liquidity, you can decide to go to a lower time frame
Because,
again
you
to
know, sometimes
refine.
sometimes you find more than two liquidities. There can be liquidity near this key level and another one also near another key level. With that, can you use the Fibonacci to
Yes, exactly.
um
Just press your Fibonacci to look for the one which is in the. I think if you understand, I thought I've been teaching this thing. I think the videos are in the group. You understand? The videos are in the group there, and how to set your Fibonacci the way you could look for all those things. You want to place it from this swing low to this swing
me,
high.
I don't have the settings of the Fibonacci.
All right, I will send it. But this one also is good. See, from this low to this swing high, we have our how is it called it again?
Premium and discounts.
Equilibrium. Yeah, we have equilibrium. This is equilibrium where everything is equal. Here's our premium,
Mm.
here's our discount. So now if we mark a line here at this, our equilibrium zone where everything is equal. Now we know this our premium zone and here's our discount zone. Now you have to bring this thing back down to this break of structure. Think. Bring it down to this break of structure again. Now, anything inside this, the next premium zone you're going to have inside anything there's going to be liquidity, and everything else, that's where you're going to look for your entry. But now it's going to confuse you a little bit because
Okay.
maybe price may not come right down here. You understand? Price may not come right down here before it goes up. That's just normal SMC. If you can place here, understand, okay,
Yeah.
before buying, price must come to your discount zone before buying. So you should be looking for liquidity above inside here. You understand? But you see liquidity, you know. SMC tells you that after a break of structure, the first pullback is liquidity. Are you
Yes.
understanding? SMC tells you after a break of structure, first pullback is your liquidity. And that first pullback should be below 50% retracement. You understand? It should be at 50% retracement or a bit below. If it's up here, that means it's not accurate. It's not really a good one. But if it's at this 50% or below this 50%, then it's a nice pullback. So after that first pullback should not be your entry. After that first pullback, hold on, wait, look for your key levels where you expect price to come again, tap and boom. So you can decide to see go lower to refine. We're going to really study refinement also. We're going to do like we have enough time. You understand? I said this is just a lifetime something where we will always be working together. It's not going to end. We're always going to work together. Any more information, I'll share here. Anything, any question you have, make sure you share. I will be able to answer the questions.
And I think with this one, it's very different from you starting from the lower time frame, looking for your sweep and break before switching to the higher time
Yes,
frame.
yes. This is actually looking for a storyline because once you've gotten this already, this is your story list, you already have a direction. You understand? This key level, price comes starts with the killer. Yeah, you don't look for liquidity inside this zone yet. You get price comes start in your key level break. You already have a storyline. Now, this storyline, if you're only 4 hours, now what we're looking for, you now be looking for those sweep breaks and all those things inside this zone while looking for buy opportunities.
Okay.
And now
Okay.
price will be coming to the next storyline, which should be this one, or it should be this one.
Hmm.
I hope I'm making sense.
Yes.
Any more questions?
But Emmanuel, if you don't find like a liquidity on the H4, you move to the H1. And if you don't find the H1, if you move to the 15 minutes and you don't still find you don't take the trade.
If there was liquidity, it's going to be visible on the H1. You understand? It's going to be visible
Okay.
on the H1, even with a week. Even with a week
Oh,
or even on the H4. But if you don't see it, better leave the trade to go. Because one thing I always tell people is if you have a trade and that trade comes to your entry and taps there and that trade goes to your TP without you taking the trade, it's not a loss. You understand? That's not a loss. You must not take, just know as a trader, you must not take all your trades. You should always look for high quality trades before you take them. Don't always be a trader that wants to overtrade. You get so let's say now you have a trader and you are not really sure of it. It's advisable to hold on. Maybe you don't find everything you need. It's advisable to hold on. Don't put your money there. You get leave the trade to run. It's like prepare everything, take your screenshot and keep you like journal the trade, just hold on, allow it to play out. If you hit TP, fine. You didn't take a loss on that trade. If you hit TP, you should be proud of yourself that you can place a trade from entry and hit TP. You should be very proud of yourself. You understand? So you should not feel bad that oh this trade went to my direction and I didn't take the trade. Oh, I'm sad, I'm sad. No. You understand? It's not easy for someone to actually to know where price is going to tap and where price is going to go to. It's not something that is easy.
Very difficult.
You understand? So it's very something difficult. And if you're able to do it, then you should be proud of yourself. You should be very proud of yourself. I hope I'm making
okay. So
sense.
for the liquidity, yes, you're making sense. So for the liquidity, I just need to be looking on it like on the 4-hour time frame and on the H1.
Where you're looking for your setup, if you know that this your setup, is there liquidity? If you where you feel comfortable that okay, yes, my setup, is there liquidity? Ask yourself that question. You understand?
Mm-hmm.
If you feel comfortable on
Yeah.
the 1 hour, if you're refined to the 1 hour and you're like, all right, this is my last refinement here, this is my setup, everything is in alignment.
Mm-hmm.
Where is my liquidity?
Yes. Mm-hmm. Okay. Okay.
So boss, please, okay, with the refinement, when maybe I get to the 1 hour and I see everything I want and I still want to refine again, is it advisable?
Yes. You can refine again to let's say 15 minutes. But if you've seen everything you want, then I don't think there should be any refinement again. I don't think there should be any refinement.
Okay.
Refinement should be again. You're just refining. The only reason for refinement, like you can actually take your trades on those higher time frames. You understand? But now the only reason you're refining is just for you to have that accurate sniper. You understand? You want to have the accurate sniper where it's
Little
going to give
drawdown.
you where it's going to a little drawdown, exactly. Where it's going to give you a little drawdown and a
Okay.
higher risk reward. That's the only reason why you're refining. If you can even refine to the 1 minute time frame, it's good. Where you just want price to just come and just smell your entry and go, it's good. You understand? So it depends on you. You just that's the reason for refinement because actually those higher time frame, if you're taking on the higher time frame, you won't know where price may come and your drawdown is going to be very large. I hope I'm making sense.
Yes.
Yes.
All right. I can go now. I'm very tired to sleep.
Mm-hmm.
All
Yeah,
right.
okay.
Please have a nice day. I'm very
Thank you very
happy.
much.
I'm so happy. I want you guys to
Thank you
focus
very
on this
much.
thing. All right.
Yes.
Bye.
Bless.
Bye.
Bye.